Hello everyone, welcome to my channel. Today, let's analyze SoFi Technologies stock. I am a swing investor, and I will not consider the price changes of a stock 1 month later. This channel only makes short-term price predictions for stocks, usually 1 to 3 weeks. Welcome to subscribe to this channel. SoFi Technologies stock has risen further in the past 2 days, which makes the stock still technically in an upward trend. In the past 4 trading days, the trading volume of the stock has gradually increased, but this may not be a good thing. In the past 2 trading days, the capital flow of the stock has been a net inflow, but the net capital inflow amount on Friday was significantly lower than the previous trading day. This means that as the stock price rises further, a large amount of funds flow into the market, and it seems that a large amount of funds have also flowed out of the market. Of course, it is not easy for the bears to significantly lower the stock price, because the support position of the stock is also obvious. Through the 30-minute chart of the stock, we can see that the stock had a large number of transactions when the stock price was low on April 4th and 7th, which was a signal that long capital entered the market to take over the chips. On April 9th, the stock price rose strongly and was accompanied by a large volume. Although some funds still flowed out of the market, these chips were eaten up by bulls again. It is worth noting that in the last 3 trading days, the stock released a large amount of transactions on April 23rd, but these chips may have been eaten up by bulls again, but the intraday stock price performance and volume distribution on April 25th were significantly different from those on April 23rd. Although the stock price remained at a certain height at the close of the day, a large number of chips were sold as the stock price rose. This means that the stock is currently facing selling pressure from profitable capital. Let's take a look at the weekly chart of the stock. From the end of March to the beginning of April, a bearish candle and a bullish candle formed a solid bottom, and the trading volume in these 2 weeks was significantly enlarged. Obviously, a large amount of long capital has intervened in the stock at a low level. Last week, the stock rose strongly and the cumulative trading volume was enlarged again, and the current stock price has a 51% profit margin from the lowest price in April. This means that the stock currently needs to face the selling pressure of bottom profitable capital. The significant increase in trading volume in the last 2 days seems to prove this point, and some profitable capital may have already exited the market. Of course, this does not mean that the stock price will not rise further, but the room for growth seems to be small. If the stock price rises further, the stock will face greater selling pressure. I think it is unlikely that the stock will break through $13.80. The current price of the stock still has nearly 8% room to rise from this position. But as mentioned earlier, it seems that it is not easy for the shorts to significantly lower the stock price. Since a large amount of long capital has been involved in the stock at a low level before, even if the stock price falls sharply, it is expected that the stock will be supported by long forces again at a certain position. Let's take a look at the position distribution data of the stock. Based on the position distribution of the stock, we can divide it into 3 parts. $11.30 is a key position. There are still a large number of positions distributed in the area below this price. This means that the long capital that entered the market at a low level before has not completely exited the market. But as the stock price rises further, the position volume of the stock in the area above $11.30 has increased significantly, and some funds may have exited the market here. Because the company is about to announce its first quarter results, it is reasonable for some profitable capital to exit the market to avoid risks. But is this a signal that the stock price is about to adjust sharply downward? I think it is possible. Let's take a look at the ratings of Wall Street analysts on the stock. According to the rating data of 11 analysts on the stock in the past 3 months, we can see that the comprehensive rating of analysts is hold, but the buy rating accounts for only 45.4%, which does not seem high. The average target price of analysts is $12.90, with a high of $20 and a low of $6. If the average target price is used as the main reference data, the potential upside of the stock does not seem to be large, and this is based on the price forecast within the next 12 months. This means that the stock still has the risk of a sharp correction in the short term. The company will announce its first quarter 2025 financial report on April 29th. Over the past year, the stock has risen 82%. However, due to macro uncertainties caused by tariff concerns, the stock has fallen 8.8% so far in 2025. Analysts expect the company's first quarter revenue to reach $739 million, a year-on-year increase of 27.27%, and earnings per share are expected to be 3 cents, a year-on-year increase of 65%. If the company's first quarter results are as predicted by analysts, will the stock soar significantly? If the stock price trend after Monday is predicted based on the results, I think the stock may start to adjust sharply downward at or above $14. Because the stock has accumulated a lot of profitable positions at a low level, as long as the stock price rises further, the stock will face huge selling pressure. But better than expected results may also cause a sharp correction in the stock price and release some of the bearish power, and then the bulls will push the stock price to rebound again and break through the recent highest price. I think such a price prediction may be more in line with the previous technical analysis. Let's go back to the daily chart of the stock. The stock rose 1% in pre-market trading on Monday, April 28th, which means that the stock may rise further next. But as analyzed above, I think it will be difficult for the stock to break through the $13.80 level. After the first quarter earnings report, the company's stock price may adjust sharply downward to below $12, but it may be supported by bulls again at $11.30 and rebound. But the stock may not reach new highs in the short term. Okay, guys, that's my price prediction for SoFi Technologies stock. Thank you for watching. If you agree with my analysis, please share and subscribe to my channel, and see you in the next video.